Good Thursday, traders. Welcome back to the Forex Bull Trade Academy with Victor. Today we will be looking at the Australian versus New Zealand dollar currency pair, and as always, before we get started, I would like to remind you that all the information in this video is for educational purpose only and should not be considered as a financial advice. The first thing I spotted on the Australian versus New Zealand dollar is the bearish divergence that RCI has formed. You can see that price went up quite strongly, although the RCI failed to produce a higher high. So this means that there is a potential for the correction to the downside. And there is a FIBS applied to the last wave up, and as we can see today, 38.2% retracement has been rejected. So price went down after bouncing off, and it could be providing right now the potential selling opportunity in the medium to short term. If we move to the daily chart, there is another perspective of this. I have used this FIBS applied to this uptrend, and here we have 38.2% retracement level. And this is the key support level for the Australian versus New Zealand, because first of all, there is a FIBS. Secondly, we are having the 200 exponential moving average, which could be going in line with this support. Price might reach this level and then continue to consolidate, eventually hitting the moving average. Now, another point is obviously that this area has been demand as well as supply zone previously, and also this is the point where the 200 exponential moving average has been broken. So this is clearly a point of a breakout. Also, we have a double top formed near 1.0865, and now there could be trend reversal. So there might be very strong downtrend forming, but still we only expect this move to the downside. But long term, this could be a massive price drop. So we see this level 1.063536, and on this chart we have exactly the same level confirmed by completely different Fibonacci retracement levels. FIBS was applied to the overall downtrend, where we have 23.6% retracement level at the same spot as per the daily chart support. I've also applied FIBS to the last wave to the upside, and we have 127.2% retracement at 1.0635. Overall, this makes the area of 10640 an extremely strong demand area and a potential downside target for the incoming wave down. Now, the critical point is placed at 1.0837. This is to meet 2-to-1 reward to risk ratio. And there obviously can be some sort of consolidation near this resistance area. We can see that this is obviously a psychological resistance as well, very close to the 1.0800. And Australian New Zealand dollar almost precisely tested this level. The highest point was 107.99 today. This is not only psychological, but also a technical resistance level, making it a good entry point potentially for sellers. So we are done with Australian and New Zealand dollar, the idea for today, and let's move back to previous ideas. Pound versus New Zealand dollar. We can see that pair almost tested the resistance, almost went up to the target, so just 20 or 30 pips left to go here, but we're heading in the right direction, still a little bit to go. Australian Swiss franc. On this pair, price almost going towards our entry point, original entry point that has been initiated quite some time back. What I think, guys, that this trade should remain valid considering the weakness, expected weakness of the Swiss franc. And the key support here will be obviously a psychological level at 0.6500. So the exit just below this level, I will just adjust it so it would be obvious. So this would be kind of idea we're having. You can see that the risk reward ratio for this idea is very good. I think it's something like 5-to-1. I think it's just worth the risk to hold and see what happens, because the risk is minimal. Moving on to the Swiss franc Japanese yen. Here, the original entry was suggested at this level at 114.60 area. Now price went up, and I did expect potential spike higher than this level here, and we obviously have the exit critical point much higher. So this is a normal price action. Price might be going even higher, but overall idea remains valid. Canadian Swiss franc, this one has been stopped out. Price went lower. Well, this was counter trend idea, so yeah, riskier than usual. We had a very tight exit here, so it triggered, and nonetheless it's time to move on. It happens, it's normal in the market. Let's move to the Euro Swiss franc. Euro CHF is also moving against the idea at the moment, although this is also an expected scenario. Price might consolidate here for the time being, even could be going lower, but it's still quite a bit to go till the critical point, and we are holding this idea. It definitely remains valid. And finally, today's idea, Australian versus New Zealand dollar, expecting this correction move to the downside and maybe even a long-term trend reversal. So that's it, guys. Hope you enjoyed it. Smash your likes, comment, subscribes if you haven't done so already, and we'll speak to you tomorrow on Friday.